Good afternoon, everyone. Happy Monday. It's the 15th of January. My name is Thilan Wickramasinghe, the head of research for Maybank in Singapore. And welcome to our latest edition of Market Mondays. The bets on US rate cuts are getting stronger again, and China's PBOC held rates flat last week. And that was some of the key sort of drivers for the markets in last week. One of the key standouts was the ASEAN markets. A lot of them was in the green. So is this the year for the ASEAN tiger or the ASEAN dragon even? We're going to have Anand Padmakanthan, our regional head of research, as well as strategist, to talk us through some of the movers and shakers of the ASEAN markets coming through. After that, we're going to talk about some of the key technical stocks that Nick, our chartist, have highlighted this week. And then finally, we're going to have a shout out to the Philippine property sector on a brand new report by analyst Alexa. But as usual, let's go to the market movers. We've got generally quite mixed markets with North Asia, particularly Japan, up. The Nikkei is up about 1.5%, hitting a 34-year high. A large part of this is driven by the fact that they're expecting BOJ to continue with their overall easing stance, especially after the earthquake there, as well as the overall economic numbers aren't looking that great. So that limits the ability of the BOJ to tighten. We also saw the S&P up about 0.1%, largely driven by more rate cut bets coming through. China was fairly muted, coming off about 0.4% for Hong Kong and 0.2% for the Shanghai Composite. I think a large part of this is given the fact that the overall easing momentum from the People's Bank of China didn't really materialize. The ASEAN markets, particularly the KLCI, was up about 0.3%. Jakarta was up about 0.3%, and the SET was up 0.4%. So ASEAN really roaring back to life so far this year. So I think that kind of brings us to a good place to bring Anand onto the show. Anand, welcome.
Hi, Dylan. Hey, thanks for having me on the show.
Now, Anand, before we talk about this year's performance for the ASEAN markets, we did see ASEAN lagging some of the bigger North Asian markets as well as the US last year. Now, at the beginning of last year, there was a lot of hope pinned on ASEAN turning around, which didn't materialize. So maybe let's start with what went wrong.
Yeah, so 2023 was relatively disappointing for ASEAN, especially against the expectations of investors and ourselves as well, as heads of researchers in the ASEAN region. I think the biggest overarching disappointment for ASEAN was China. ASEAN 6 will have very deep linkages with China on multiple levels: trade, investment, FDI. And China did not rebound from its reopening by as much as we had hoped, and I think as much as the world hoped. And that really poured a bit of cold water on the ASEAN story as well. And China continues to struggle into 2024, as we well know. Some other contributing factors, I think, we linked to the China disappointment, we did see a lot of foreign selling across ASEAN. So every single market in ASEAN 6 saw net foreign selling last year, which was disappointing. And I think we have some country-specific issues as well. Political noise was pretty high last year. For ASEAN, performance is one thing, but politics tends to interfere quite a bit in these markets. And we had Malaysia just completing a general elections, and there was some follow-through intrigue on the government. Thailand went through quite a messy election as well, and that soured sentiment on that market quite significantly. So those were other factors. And finally, I would say FX as well was against us in ASEAN last year. We did see, because of the huge interest rate hikes in the US, some countries in ASEAN tried to keep pace, like the Philippines, Indonesia, very dramatic interest rate increases there. But the rest were more subdued in terms of raising rates, and we did see local currencies lose ground, which reduced the attraction of ASEAN markets as well.
Right. So, and I think that's a good place to kind of talk about ASEAN now, because ASEAN seems to be making a comeback this year. We've got Malaysia, Thailand, Indonesia, Vietnam, all in the green, and some of the big laggard markets like Malaysia and Thailand turning around. Are you seeing any common themes that you can identify that's kind of fueling some of these green shoots?
Yeah, I think at a macro level, we are seeing sort of a broad-based re-acceleration in GDP growth. I think last year for ASEAN 6, we had about 4% GDP growth on average across 6 countries. This year, our macro team thinks it will accelerate to 4.7%. And that's really based on a recovery in manufacturing and exports. Yeah, that was quite subdued last year, primarily because the electronics or semiconductor cycle was quite weak. But we expect that that cycle to recover this year. And we're already seeing tentative signs of that in export data across ASEAN. So that's going to sort of support the macro picture quite substantially. But some other factors as well. We continue to see very significant FDI inflows into the region. So the supply chain relocation theme is definitely alive and kicking. We're still seeing record FDI numbers into Vietnam, Malaysia, other parts of the region as well. That's going to be a big boost for our economies. Tourism, bit of a damp squib last year. A lot of it, linked to lack of flight capacity, and also the Chinese market was softer than expected. We expect that to turn around to a large extent this year, especially flight capacity recovering very quickly. So that will be a big boost as well for the region. And I think the last factor that should support ASEAN markets, but this is, I must say, this is something that's always been the case. We are incredibly cheap. As markets go. Yeah, you see North Asia rally really strongly last year. Valuations are really high. But ASEAN, 10 to 12 times PE into a recovery year where earnings growth is 10% to 20% for most markets, looks very attractive.
Yeah, I think cheap valuations is definitely quite attractive. I think we have a slide on that, if we can show the valuations of the ASEAN markets team. Anand, let's drill down to Malaysia. There seems to be some stabilization of the ringgit, a lot of policy reform discussions that are happening now. Also, this proposed special economic zone between Johor and Singapore as well. So how do you see the Malaysian market, and what are some of your top sectors as well as top picks here?
Yeah, so I think, you mentioned year-to-date performances by ASEAN markets being quite strong, and Malaysia was one of them, one of the outperformers. And this is really linked to what was announced last year in Malaysia. So we had a slew of policy and reform measures announced in 2023. The energy transition roadmap, industrial master plan. Also, we did pass some key legislations relating to fiscal reforms as well. So I think this year, the market has very high expectations that all of these will be executed, and that will open up a lot of thematic plays for the market to work with. So one big one, which has been at work at the start of this year, is the increasing linkages with Singapore, or attempts to build more economic cooperation with Singapore. A special economic zone has been in the headlines for the last 2 weeks. But I must say that's the tip of the iceberg. In Malaysia, we're also expecting a lot of developments up north in Penang in terms of a new airport, a new rail line, a huge reclamation program by Gamuda, as well as continued FDIs into the electronic sector there. Also, East Malaysia, we're looking at renewable energy exports to the region, including Singapore, as well as investment in more sort of green technology like hydrogen production. So all those thematics have a lot of market names associated with them, and that's what we're seeing being traded right now in this very bullish environment.
Okay, so a lot of themes to look forward to. Anand, we've had several incarnations of this Johor, Singapore economic integrations in the past as well. What's different this time? And, any sort of key names we should be watching out for?
Yeah, I think you're right. I mean, this is a bit of an old story, but perhaps the execution level, or our belief in the level of execution is a lot higher this time around. It seems a lot more practical. I think the starting point was the lifting of the ban on RE exports in the middle of last year, because Singapore is hungry for green energy. I mean, I think there's a target in Singapore to raise it to 30% of the energy mix from less than 5% now, I assume.
Yeah.
And Malaysia, is perfectly positioned to play that role. And the energy transition in Malaysia, in terms of planting up on solar in particular, is with a view to supplying Singapore. And a lot of that capacity should be based in Johor for a variety of logistical reasons. Also, we are seeing sort of non-government support for the Johor thematic in terms of FDIs. And this is principally in things like data centers, which is a huge growth industry now in Malaysia. So we're seeing big investments by a lot of MNCs in data centers in Malaysia. And that's a lot to do with Johor's proximity to Singapore as well. And finally, I think when it comes to the special economic zone, special financial center, we have to remember that the next king of Malaysia is the Johor Sultan. Yeah, so I think that aspect would potentially lend some support to interest in Johor State and investments there as well. So I think if you want to play Johor, there are a couple of ways to do it. Property and construction are two sectors we are focused on. So for construction, stocks like Gamuda, IJM, Sunway, they all have a significant exposure to Johor. Property, things like UEM Sunrise, SP Setia, would be stocks with huge land banks. They have seen some re-rating already, but for a stock like SP Setia, we do see still some significant upside. Yeah.
Okay, great. A lot of ideas there. Now, I just want to kind of go north of the border to Thailand, which has been a major laggard last year, despite the change in government. But if you're looking at this year's forecast, we are being quite bullish there in terms of forecasting a recovery. What is driving this, and where do you think the opportunities are, Anand?
Yeah, so Thailand had a really tough year last year. It was the worst performing market in ASEAN. It was down like 15-16%. And net selling wise, it trumped everyone. It was minus $5 to $6 billion of selling in Thailand last year, compared to less than $1 billion for most of the other ASEAN markets. So it was a really disliked market last year primarily because of the political issues following the elections. But I think our head of research argues now that a lot of that is settled down. Government is stable and solid, and we're looking forward to a lot of stimulus measures to get the economy going again. So one is this e-wallet scheme, e-wallet handout scheme. It may not be as big as initially announced, but still we do expect some sort of stimulus for consumers into 2024. The other thing is we do expect, as I mentioned before, as a regional driver, tourism to be a stronger factor this year. And Thailand is your number one tourism proxy in ASEAN. And the good thing about Thailand is that they're demonstrating their ability to diversify away from the Chinese market, which is overwhelmingly the key driver for tourism in Thailand. Now you're seeing a lot more from ASEAN, a lot more from South Asia as well, like India. So that diversity, I think, will provide the impetus for the tourism recovery this year. And of course, valuations are, as I mentioned, last year was really bad, so valuations are looking relatively attractive. So some of the stocks, I think, or some of the positioning our head of research there likes. One is the macro place. You have to be in the banks for the macro place. So something like Kasikorn Bank, also Eastern Polymer Group, EPG, would give you that exposure. Some margin plays as well, like PTT, and also True, which has gone through a merger, and we should see the merger synergies come through this year in terms of better margins. And some of the bottom-up plays like Bangchak, Com7 for consumer exposure are the kind of stocks that we're talking about in Thailand for this year.
Got it. Just maybe very quickly on Vietnam and Indonesia, anything that you'd like to highlight on those markets?
Yeah, Vietnam, continuing love story. I think very hard to find fault with Vietnam. Last year was a little bit slow due to some regulatory issues with the property sector. But we're bouncing back this year. GDP growth of close to 6%, earnings growth close to 20% for the market on average, 18% for the banks. So a lot of firepower behind taking the index higher. The big story for Vietnam this year, though, besides this corporate and macro recovery, is potential promotion from frontier market to emerging market, and that's something the Vietnamese authorities and regulators are pushing very hard for. with FTSE in particular, for that to happen by late this year or into 2025. And that will open up the floodgates in terms of capital inflows by foreign funds. So our Vietnam head of research has two target prices, actually. A base case, which is a 15% upside based on fundamentals, which I mentioned before, and a bull case based on the market being promoted to emerging market, and that's a 26% upside for the VN index. So in Vietnam, we really like it across the board. For Indonesia, I think the story there is going to be a little bit more muted in the first half because of the elections. Presidential elections are in February, probably go to a second round, so run through to July. But we don't expect any major volatility around the elections or in terms of how the country is focusing on economics. So downstreaming, FDI, and consumption will be the main thematics for Indonesia this year. So two sectors we like there, banks like Mandiri, Rakyat, BCA, and also property like Ciputra, Summarecon, as well as Cement Indonesia.
Great. Thanks. I just want to remind, please do download our newsletter today because, we're going through a lot of sectors, a lot of countries, and a lot of names. All of that is available on our newsletter, so do download that so that you have it in front of you. Anand, that's all the time we have today. So thank you so much for joining us, as always.
Most welcome. Have a good week ahead.
Now, let's turn to some technicals. We got Nick, our technical analyst, pointing to two stocks today. One is ST Engineering. He thinks that post-breakout move above the triangle pattern that was in place since around October 23, the stock has completed a pattern return move while forming a higher low structure within their 50-day EMA line. Giving the ongoing bullish technical reading, both for its RSI and MACD, he expects the current uptrend to continue. The second stock he's highlighting is CSE Global, which is one of our small cap opportunity plus stocks. Here as well, he thinks that within the triangle pattern, there's likely going to be a tail end in terms of the stock's rebound. And given the emergence of fresh buying entrants this last week, he does expect a new cycle to unfold with the stock set to challenge the next level of resistance ahead. So again, quite positive from Nick on the technicals. Now, finally, I want to touch very quickly on the Philippine property sector. Here, Alexa is reiterating her positive call. She expects the property sector to see around 11% revenue as well as net income growth going into this year, mostly driven by the mall segment. She also expects the residential segment to pick up pace following potential rate cuts going into the second half. SM Prime is her top pick there. The ticker is SMPH. And mostly driven by their big gearing towards the mall segment. On the REIT sector, she thinks it will be logging around 3 to 4% annual rental hikes, sorry. And also occupancy should be ranging around 95 to 97% there, despite some very high vacancy rates for office. Revenues and earnings for the sector are set to grow around 13 to 15% this year. So quite chunky sort of growth coming through. AREIT, and the ticker is AREIT, is a top pick in the REIT sector, given their space is in fairly strategic locations in the high demand CBD areas, and they've got 97% occupancy and 4 years for weighted average lease expiry. So quite a bit of earning certainty there. So do have a look at her report here. In terms of upcoming corporate announcements, we've got it's a very busy week in terms of announcements from macro as well as corporate. We've got non-oil domestic exports coming out on the 17th, inflation reading for Singapore coming out on the 23rd. We have a whole slew of REIT results starting from the week of the 24th. And then we have the property price index coming out on the 26th. Apart from that, we've got quite a few US and UK macro numbers coming out this week as well. So do watch out for that. Few events I just want to kind of highlight. We've got the Thai Tech Virtual Day and the Thai Consumer Virtual Day happening on the 16th and the 23rd of January. So please do ask your salesperson if you would like to join these events. And then finally, I want to make a special highlight for our market outlook and feng shui event, which is happening this Saturday, the 20th of January. There's a lot of exciting events happening, but some of the key highlights to talk about is we will be giving an overall Singapore macro outlook by macro analyst Dr. Chua Hak Bin, as well as I'll be talking you through some of our key sector picks for Singapore. And then we will have Master Ken Ko, who will take us through his views on the upcoming Dragon Year, as well as some of the sectors to play, as well as your personal fortunes as well. We will have quite a few corporates in attendance as well, who will, with their CEOs, CFOs, and other C-suite as well, who will be presenting some of their latest updates as well. Plus, there'll be dragon dancers, lion dancers, as well as a lot of other prizes and surprises to be won. So please scan this QR code and join us for this live event on the 20th of January at the SGX Center. With that, we are out of time. So I will see you on the 20th of January at our Market Outlook event. And thank you for joining today, and have a profitable week, and see you next week.